Why is Apple in my pension, in my SIP and my ISA? Well, I think it really helps to answer that question by having a look at the stock. And it's not about price charts. It's not about valuations, actually, even with Apple, or discount cash flows, because there are certain categories of companies where it's very difficult to determine if they're over or undervalued, only because they're innovating at such a rate that, take Tesla for example, I don't know, they might create a time machine the rate they're going. And Apple, in many ways, is one of those which people have said, oh, well, that's it, they've done the watch, or they've done the music thing, what are they going to invent? People are trying to reinvent Apple. Well, if they were going to reinvent it, they would have done it themselves. So why is it my SIP or ISA? Well, most importantly, I don't want a mediocre pension. If I don't want a mediocre pension, I need to have extraordinary results. And one of the best ways of doing that is sacking the fund manager, sacking the IFA, and then looking at individual equities. Now, I wouldn't recommend people have just one or two stocks in their portfolio. Obviously, I think 15 to 40 has been statistically proven to be a pretty good number. We can talk about diversification and correlations in another video at a future date, because people think if they're all in the same sector, surely they're more highly correlated, which obviously, actually not obviously, but it isn't true. The things we believe are often proven wrong by data and facts. But that's a separate video. What I want to discuss at the moment is one of the purposes for having Apple there almost perennially is, with the exception of some exceptional circumstances where the rest of the market has just been doing very poorly, and February of last year was an example of that until end of December. And that was very rare for me to have actually got out of even a good company like this, is that on the whole, they tend to grow at a pretty substantial rate. And you can see that if we go up here, that's a 200% growth rate over 2 years. The stock price tends to grow rather at that substantial rate. And I don't want a mediocre pension, as I mentioned. So whether you're going to look at valuations, well, they're not going to help with certain companies like this. You're going to look at growth. The trick is not to look at the minutiae and not to follow the price every single day, because it'll drive you nuts. If you are investing, then you do not want to be looking at it every single day. Because, as I said, you'll just second guess yourself and you'll panic. And even if you look at periods like this, now that's why in my videos, for those who are that way disposed, I do show them how we can get some idea of momentum to see if it's weak or strong. And we can look at, obviously, fundamentals, valuation, revenue growth, dividend yields, and so on. But in summary, the reason Apple is in my SIP or pension is because it keeps delivering results and making sure I don't have a bad retirement. It's as simple as that overall.